What ANZ just did is massive. They quietly upped their housing forecast, and it changes the game for property right now. If you're waiting for the market to crash before you buy, that bet might cost you. Let me break everything down, give you all the data, show you the charts, and give you what you need to know before making your next move. Hey guys, this is Kuru coming to you from the beautiful Hamilton Island with another daily property update. Make sure to hit like and subscribe. This is your 3 to 5 minute update every single day on the property market so that you can become a property insider. Until recently, most boom predictions were very cautious, but now ANZ expects capital city home prices to rise 5% in 2025 and 5.8% in 2026. That's a more aggressive view than earlier forecast, and they're explicitly banking on rate cuts plus pent-up demand driving the next round of market growth in Australia's property market. In fact, they note that historically, once the RBA starts cutting, the housing market accelerates quickly. Just a side note here, ANZ actually did a report called Australian Housing Signs of Slowdown. Now, this report also flagged that 2024-2025 would slow compared to the red-hot post-COVID years, and now they're positioning for a rebound. This isn't just a bank making bullish predictions. This changes the narrative because it tells us they believe the worst is behind us. Now, for investors, that means waiting on the sidelines could be a missed opportunity. But this is critical. Not every suburb or type of property will ride this wave. Risks that you need to watch. You need to look out for the affordability ceiling in each suburb and each location. Many buyers are already maxed out. A 5% jump in prices might stretch them further, dampening demand in that particular location that you want to invest. You also need to look out for the rate cut timing. If RBA delays, price growth might lag or stall. And lastly, the supply response. If new buildings flood some suburbs, those zones could stagnate. So you've got to factor in true demand versus true supply. And remember guys, supply data is actually the hardest data to get your hands on and to analyze and to understand. So this is not buy everywhere. It's about picking zones, locations, suburbs with structural supply-demand deficits. Scarcity. Now, here are the steps I recommend. Firstly, you need to review your pipeline. If you've been holding off on acquisitions, now is the time to revisit your shortlist. Next, you need to stress test your cash flow. Assume interest rates may stay higher for a little bit longer. And can you survive with those higher interest rates? You need to lock in finance early. If rate cuts are coming, getting your approvals ready gives you a speed advantage in the market. Remember, the best properties come and go on the market very, very quickly. Target scarcity suburbs. Look for suburbs with low new supply, tight vacancy, and upcoming infrastructure. You want a mix of property and be very smart about it. Units, apartments, and townhomes may in fact grow faster in many, many markets because of the price point of those properties into that market. And of course, if you want all of the forecasts from AMP, CommBank, Westpac, ANZ, make sure to hit the like button and subscribe to your daily property update. This is your 3 to 5 minute update every single day on the property market so that you can be a property insider. And go out and check out some of my other videos on some of the other major banks and research houses, what they predict for 2025, 2026, and beyond. So yes, ANZ just flipped their forecast. That's a signal, not a guarantee. But if the market is indeed gearing for a rebound, waiting for the bottom could cost you half your upside. Go ahead, guys, and drop a comment. Let me know your thoughts. But whatever you do, don't sit on the sidelines. Don't wait for the market crash. Act while others might be hesitating. Take care, everyone.